Hi guys, thanks for tuning in to another episode of Nuggets News. Well, the RBA have just cut interest rates to a record low 1% in Australia. I'm going to talk about our economy, how it fits in on the world stage compared to other large economies, and our place in terms of imports, exports, what's holding up our economy going forward, and what changes I believe that we need to make. So Australia's economy is currently pretty reliant on our exports, housing and construction market, and banks and finance make up a very large percentage of particularly our stock market, which I covered in our documentary. Check that out if you haven't already. We've also got smaller sectors like healthcare, technology, and education, but a lot of the focus at the moment is around the housing market, and if that falls over, how that's going to affect a lot of other things like all the consumption that we do, retail, shopping, and all those numbers. Car sales are all falling at the moment. So let's talk about Australia's economy in relation to the rest of the world. So we've seen America go through the GFC, and a lot of the rest of the world was affected when Australia actually dodged that bullet. And the rest of the world have had interest rates at 0% or even negative in Europe for a number of years now, and they're starting to come out the other side of that. So the US is at 2.5%. Europe's still around that zero mark with some countries negative, and throughout Asia, it's a bit of a mixed story between those developing nations and a large economy like China, which is chugging along at 6 or 7% if you believe those numbers. So in terms of that money flow around the world, when everything is booming in Australia and we had interest rates fairly high at 7% when the rest of the world was entering a GFC, well, lots of money comes into Australia. If you can get 7% in a bank account versus 0% somewhere else, there's good things to invest in. There's companies and stocks in the resources sector that are doing well. Our banks were strong. We saw a lot of money flow in, and that pushes up the Aussie dollar, and it got up to $1.10. More recently, commodities have been a bit weaker. The housing market's turned down. The rest of the world have got higher interest rates, and a lot of that money has been sucked back out of Australia, and that can be a bit of a worry for liquidity and other things that I won't talk about too much today. But a lower Aussie dollar, it's now less than 70 cents, does help our exports. So iron ore, our biggest exports, gold, wheat, copper, and coal. I've spoken about this a little bit. I think we're too reliant on volatile things. The price of gold is up recently. Iron ore's at 5-year highs, so we're actually pretty lucky that has really helped us. We could be struggling if that was at 5-year lows. I think we're going to turn away from coal to things like renewables and all resources and commodities. Developing nations can often produce for lower costs with lower labor to Africa, developing nations in Asia and the rest of the world. So that's something that I think we're going to be less competitive at, and that goes for everything: technology, education. The rest of the world is catching up to us. So I think we've been patting ourselves on the back in a lot of ways, and when we felt really rich with all that money coming into the country and house prices at record highs, that's when we became that consumption-based economy, going out for coffee, avocado, and toast, buying more properties, leveraging ourselves up, negatively gearing, and everyone felt rich, and that's kind of changing at the moment. So let's talk about the RBA, the Reserve Bank of Australia. We often hear about the Fed and the ECB. We know that they did a lot of QE, money printing to buy bonds, and in Japan they've printed money to buy stocks and all sorts of things. So the world continues to be a crazy place, but the RBA haven't had to do too much of that just yet. So their three mandates are currency stability. So as I mentioned, the Aussie dollar has gone up as high as $1.10, then down to less than 70 cents. So I'm not sure, if you can really blame them for that. It's been a pretty extreme cycle in terms of the GFC and what's happened there. The next one is full employment. Now, Australia does have unemployment rates near record lows, around 5%. But recently, the RBA have come out and said that they want it lower. They're aiming for 4.5%. And if we scratch beneath the surface, as Martin North and I talk about in our monthly market update, we've seen underemployment trending higher. So people have part-time jobs. They're driving Ubers. They've got a second job at the local cafe. We don't have those high-paying, high-skilled jobs, and that's why wages aren't growing. So people are feeling the pinch as the RBA is targeting inflation of 2 or 3%. They've consistently missed that band, and a lot of the time it's been higher as well. So people are falling behind, and we can definitely feel that. The prosperity of the Australian people is probably something that they haven't really achieved. So in a lot of ways, Australia is the lucky country. We've got lots to be thankful for, but when the average family is falling behind and the average person can't afford an average home on a decent salary, and we see other people with huge property portfolios, I think there's too many things that have favoured investment in property. And that's where we've seen the banks really favour investment in property over other sort of businesses and startups and that sort of thing. In terms of that business environment, Australia has the third highest business tax rates in the world. So we're not that competitive on the world stage. And that's what worries me a little bit. But I don't want to blame the RBA because they've got a pretty tough job. Because to be honest, our government's been pretty hopeless. They've had their hands tied. We've gone through all these prime ministers. They're butting heads. Nothing has really got done at a time when we need it most. Love or hate Trump, he's come through. He's got those tax cuts in. Businesses are booming. There's more money in the hands of entrepreneurs. I think the government need to get really active here at the moment. So our government debt is actually quite low, and they're obsessed with having this budget surplus, taking in more than they spend. But as you know, Steve Keen and modern monetary theory talks about that not actually being the greatest idea, because you actually want to spend money, particularly if you don't have 20 trillion in debt like the US government. Our government's got a little bit of room to move to help stimulate things. And, we have high immigration, people coming into our country. If you look at public transport and how congested it is in Melbourne and Sydney, and the quality of construction's been in the headlines lately. So it hasn't really been that great. We haven't really kept up, and I wouldn't say we're thriving by any means. Lots of corners have been cut, the Royal Commission, that sort of thing. So look, all that stuff happens when there's money and greed in the system. And to be honest, I think the government and banks are to blame a little bit for that. So what I'd love to see is tax cuts, particularly for small and medium businesses and the lower income families. Now, they're talking about passing that soon. You might get $1,000 in your pocket again, which really did help back in 2008. But I don't think a family that can't afford an $800,000 home is going to be able to suddenly buy one with an extra $1,000. So it's going to give us a little bit of a kick, but it's not a huge change. I actually think we need to make those tax cuts bigger and faster. They're talking about them being 3 to 5 years away. That's not going to help anyone if we have a downturn continuing, as we see at the moment in Australia with the numbers. So I'd love to see the tax cuts for the smaller guys, but the bigger guys aren't paying any tax. 1,000 large companies in Australia paid zero tax. So we need the big boys to start paying their fair share. And that's sort of what the global G20 have been cracking down on lately. Big companies, tech companies, and tax avoidance and that sort of thing. So, we want to help the little guys. Structural reform. We need the government to get active in 3 industries that I'd love to see more money go into. Healthcare. There's aging demographics globally. Not only the care, but the medication, the pharmacy, those side of things. Australia should be leading the way in research and that sort of thing with all our good universities. Technology. The world is going online. Software is running the world. And we're looking to enforce encryption laws and surveillance and that sort of thing. I'm not sure how that's an attractive place for any sort of tech company or thinking about moving here. So I don't think Australia is doing that great a job there. And then education. As I said, really strong unis. We can produce doctors and engineers and that sort of thing. If the Aussie dollar is lower, we're probably going to get a lot of students from overseas come and study, as well as tourism and that sort of thing. So, look, that's what I'd love to see. We don't want people going into huge student loans and debts and getting crazy unaffordable and ending up with jobs and degrees that you're not going to use. So we want high quality, high skilled jobs coming out of our universities. Finally, a more friendly business and startup environment. That sort of thing creates jobs. And I know personally, if I had lower taxes and more certainty around a lot of other things, that we'd probably employ more people instead of just handing over all this money, both personally and as a business, to the government in tax every year. So there's lots of things I think we could be doing better, but that gets me to where we're at right now in terms of previous recessions and whatnot. So in 1990, the recession that we had to have, we cut interest rates from 17% to 5%. Can you imagine being able to get 17% in a savings account these days? Unheard of. So a big 12% cut. In 2008, yes, we avoided the recession the rest of the world had, but we still cut from 7.25 down to 3%. Now, at the moment, we're at 1%. So this is 2019 at time of recording. There's already talk about maybe even 2 more rate cuts this year, so we'd be at 0.5% before a recession's hit. Now, some people say that's great to try and get in front of the curve, but I think the RBA's mandate has really changed. They're so focused on the housing market, and just because housing is unaffordable but now coming down doesn't mean we should try and make it unaffordable again, or the government giving out these huge first homeowner grants or encouraging people to only have 5% down loans. I'm not sure that giving people $1 million mortgages that are unaffordable is that great idea. It's not going to lead to that much prosperity. We need things to go back to reality or get wage growth, structural reforms and tax breaks and that sort of thing. So if we do head into recession and they have to cut around 5%, which is the usual case globally we see in recessions, is Australia realistically going to go to minus 4% interest rates? That would be really insane. So I think that's when we see the RBA step in with other things like QE, big government handouts, but that's treading a fine line to not cause inflation. But negative 4%, you're not going to get that rate on your credit card, maybe not your mortgage, although we have seen negative mortgage rates in Europe. And that's hard for a lot of people to comprehend, but the system is so reliant on debt and constant expansion that they're that desperate for you to go into debt, they'll pay you each month rather than you pay them. So look, let me know what you guys think about all this in the thoughts and comments below. Have I missed anything? If you enjoy these conversations, join our group by heading over to nuggetsnews.com.au. Hit a like, subscribe if you haven't already, and thanks for tuning in, guys, and I hope you do share this one around with friends and family. Cheers.